All right, we are back at the MBS, and I just want to go over the HP12C and guide you through how you would calculate how much you qualify for conservatively when you're looking to buy a house. And I'm going to try to use a realistic number here as far as car payments and student loan payments, and that's probably all you should really have. If you have credit card balances, shame on you. So if you don't have the HP12C app, it is in the bio in my link. So it's a free app. You got to deal with some ads. But any which way you swing it, it's good to have, right? You can do this for really any type of financing you choose. And then you could, beat the dealers and stuff when you go to the car dealership and whatnot. Plus, it's fun to calculate your retirements as well. So without further ado, let's do it up. So how I usually work this is I always ask, okay? I always ask, all right, so what's your gross salary? Assuming you're W-2, not self-employed. Let's keep it simple, all right? They're going to say, I make $100,000 a year. All right, so initially I take 100, okay, divided by 12, and this is your gross monthly income, all right? Now from here, again, being conservative, because you shouldn't borrow the maximum amount you could qualify for. Because in the event that an emergency happens, you do need a new car, you might be over 50% of your gross monthly pay going towards debt, okay? So your gross monthly pay in this scenario is $8,333,333. From there, all right, you're going to press enter, all right? Because remember, you're working backwards here. You got to say less, you got to be an accountant here. And then let's go 35%, okay? Now, this means that 35% of your income is going to go towards all debt, not just the mortgage, all right? So your remainder is $2,916, okay? So you have $2,916 to pay for all your debt, all right? So say you have a student loan. Student loans are about $300 a month, all right? That's great. Now you're left with $2,616. From there, all right, I have a car payment. Your car payment, I'm not going to use the average now, which is like 700 bones. Let's call it $400. So we're at $400, okay? Now, you're left with $2,216 and change to pay for principal, interest, taxes, and insurance. Okay, and insurance. So let's say estimated insurance cost about $150. All right, and estimated taxes a month. Let's just say about $500 a month. All right, you're left with $1,566 to pay for just principal and interest. Now, mind you, this is at 35% back ratio. It's a super comfortable number when you're making your payments. All right. From there, this is your payment. So this is the remainder. This is the max at 35% DTI. That means your back ratio is 35%. All right, remember front and back ratios? We went over those. So this is the remainder. Now you click payment, PMNT. All right, we're working backwards here. PMNT, click. Average rate, you could just Google this. Let's just say 6.25, okay? 6.125. Today is June 4th. That's what the 30-year fixed is. Assume you have good credit. Right? It could be a little lower if you put more down, but let's, all intents and purposes, say you're putting 20% down. All right? So 6.25 GI. All right, now 30 GN. All right, because that's 360 months in a 30-year amortization, 12 months in a year. Okay, makes sense. And then present value. You just click PV. All right, and this is the mortgage that I would like to see all you take out. All right, now you're going to say, $250,000 mortgage doesn't give me jack. All right, I agree with you. Everything's pretty high. I mean, realistically, you just got to make more money. That's what it is. First-time home buyers, I feel for you. It's really tough right now. Not just the cost of living, but the cost of home ownership and the rates, right? Obviously, I'm going to say the rates realistically aren't that high, but with everything else, yeah, it's high. Everything's inflated, right? And then from here, if you're going to put 20% down, you just take this and then divide it by 0.8, all right? And that's going to give you the purchase price. So I'll just round up. So $320, say you make $100,000 a month and you got your student loans and your car payment with the numbers I stated, you're looking for a purchase price of about $320. Okay, obviously if you buy home for $320, your taxes are probably less than $500 a month, but it's a good guesstimate, right? You want to be conservative with all these numbers. You don't want to be house poor. You want to be able to still save. You got to stuff that money away, right? Get your employer match. The rest goes to a brokerage and a high yield, all right? So anyway, this is how I work backwards to see how much you qualify for. And truthfully, this is just a standard pre-approval. This is all I do, right? I do simple math, send out a pre-approval, bop, bop, bop. This is what you can afford. All right, Mortgage Bro Science, please share this video with anybody who might be looking to buy a house and trying to see how much they qualify for. All right, you could just as easily call your local bank and they can do this for you. But this is exactly how the math works. All right.